So after a whole year of extreme uncertainty and high skepticism from basically all foreign investors, China has finally provided us some clarity about how they want their companies to sell shares in other countries. And since this latest regulation report comes right after China announced an all-new self-reliant superpower agenda, tells me that 2022 could be a much smoother year for some of our favorite major US listed stocks. As a matter of fact, NIO stock was up more than 15% on Thursday on a very significant amount of volume, which tells me that hedge funds are finally taking note of some of these super beaten down growth stocks. In this video, I'll be breaking down this latest news from the Chinese authorities, sharing my thoughts on what exactly this can mean for Chinese EV stocks, and at the end, I'll conduct a technical analysis of NIO stock and some other EV stocks to get an idea for whether or not the share price has finally bottomed for these very high growth stocks. But before we get into it, guys, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. I want to start off by addressing some of the big news out from China earlier this week, where Chinese Securities Regulatory Commission, or the CSRC, basically proposed that all Chinese companies that are seeking IPOs in foreign countries and additional share sales abroad would have to register with a new securities regulator. Essentially what this means is that Chinese firms that are looking to seek abroad listings through the VIE structure, which is basically the variable interest entity structure, may need to actually complete the compliance procedure with the Commerce and Economic Planning Ministries of China. And on top of this, these companies will also have to go through a very scrutinized cybersecurity review before getting the clearance under this government policy. And the big reason why this is such an important news is because of the fact that VIEs have historically been very worrisome for most global investors. You see, the problem with VIEs has been that they enable Chinese companies to bypass multiple rules on foreign investment regulations, especially in very sensitive sectors like the internet. What the VIE structure basically allows the Chinese companies to do is to transfer their profits to an offshore entity that may be registered in the Cayman or British Virgin Islands. And as you guys might remember, Alibaba is specifically listed on the US exchanges through this exact structure. But now with the new regulations, China is basically saying that VIEs are going to become much less relevant because there will be a big supervision by these Chinese Securities Authority. What basically China wants is that any tech company that may be wanting to raise money from outside investors has to go through a much more scrutinized process as to not disclose any private information to other people. However, the best part for investors in the US is that this new rule set does not apply to any already listed stocks in the US exchanges. And this certainly applies for stocks like NIO, Xpeng Motors, and Alibaba. In addition to this, China also came out and said that they want to essentially become a big self-reliant technology superpower of the world by making Alibaba manufacture its processors and chips in-house. Now obviously Alibaba is an internet company, so it's never really done manufacturing in-house, which is why this is definitely going to be a very tricky and expensive business aspect for Alibaba. However, this can be a bullish thing for stocks like NIO, Xpeng, and Alibaba, because this essentially means that the Chinese government is going to pour a lot of heavy research and development support into some of its biggest tech companies. And in my honest opinion, any more pressure from the Chinese government is definitely going to be a good thing for Chinese EV stocks in particular, who can take over Tesla's market share slowly because of all this pressure. And on top of this, if you really think about it, this new Chinese pressure also brings a lot of uncertainty for a US company like Tesla, who's basically been taking advantage of cheap labor in China to make its factory and its cars. But overall, this new laid out plan by the Chinese government, in my opinion, is definitely going to act as a big sigh of relief for US investors, because it shows that China really cares about the quality of its companies. And obviously on top of that, China wants its biggest tech companies to be absolute leaders in their sectors. And that could certainly be reflected in bigger valuations for Chinese stocks in the US, as more and more government funding might be funded into these companies. So now that we have an idea of some of the latest news out of China and what it can mean for some of the biggest Chinese stocks, let's get an idea for what exactly happened with NIO stock very recently. As you guys might have heard in the news lately, NIO stock has definitely underperformed all of the Chinese EV stocks this year, primarily driven by delisting fears, a lack of new models, and slowing growth. And so at this point, it's safe to say that NIO stock has essentially become a leader in the high growth sector massacre that we've seen over the past year. Every small cap, high growth stock that is not profitable has been getting aggressively sold off by hedge funds and institutional investors in the US. And it's important to realize that this is not specific to Chinese stocks. I mean, we've seen stocks like Teladoc, Zoom, and obviously Palantir get absolutely destroyed over the past year or two. But with today's insane volume and some big delivery expectations for December, NIO stock could finally see a rotation to the upside in my opinion. And the best part is that this rotation will help all the other high growth stocks too, because like I just said, NIO has kind of been leading this way for the downside on these high growth plays. And because the EV sector in general is expected to have a very big year in 2022, this will certainly help other companies like Xpeng Motors, Li Auto, and obviously Tesla. And I would not be surprised that another big reason for why NIO stock and other EV stocks in this space were up so big today is because of the fact that Tesla recently had a major price target upgrade for 2022. And the critical part about this report is that this big price target upgrade is not primarily being driven by Tesla's execution. It's also being driven big time by the insane growth people are seeing in EVs. Europe and Asia have become the biggest EV markets, and Tesla and NIO and Xpeng Motors are obviously expanding very big in both of these continents. And if you pair that with the fact that NIO specifically has some major catalysts that are coming up in 2022, like the delivery of their ET7 and their new ET5 sedan, and the fact that they've also been deploying these new battery swap stations in Europe, 2022 could be a much better year for EV stocks in general, particularly NIO. And yes, even though 2021 has definitely been a very tough year for high growth investors, 2022 definitely has some light at the end of the tunnel, especially since we have this new clarity from China, and obviously we also have this clarity from the Federal Reserve about interest rates. And generally speaking, I expect inflation to definitely taper down in 2022, which could obviously help the valuations of some of these very high growth stocks. If we now move on over to the stock chart of NIO, you can see that this stock has definitely seen a lot of incredible trading volume over the past week. The stock definitely had a very tough start to December as it sold off an incredible volume from around this $40 level all the way to hit a low of around 27 bucks. And as you can see, generally that brought in quite a lot of volume into the stock. And more recently, we saw this incredible short squeeze that happened today on almost 6x the average trading volume. And as you guys can see, if you go down to the lower time, and if you think about it, this level definitely acts as a very strong support level because this is exactly where the stock had this very major run up back in December and January of last year. And at least in the short term, this is definitely a bottom in for this stock. If you go out to the weekly chart, you can see that the stock had a very tough time getting around this 50-week moving average. After topping out in January and February, the stock pulled back in the middle of June to test this 50-day moving average and then pulled up all the way up to 55 bucks. And then a few months later, it came back to test that 50-week moving average once again. But as you can see, unfortunately, it got rejected, and now it's come down to this extremely strong support level right around this $27 level. And as can be seen by these very big wicks at the bottom of these candles, there's definitely a lot of buying pressure around this area. And so generally speaking, my first price target for NIO stock would be right around this $40 level that I think the stock can definitely hit within the next month. And if we get above this $40 level, I think a big run to $48 or $50 is definitely in the cards. As you guys can see, back in May, we saw a pretty similar story happen where NIO stock essentially sold off for 3 straight months, and then after forming this nice double bottom, it rebounded very aggressively. But anyways guys, make sure to drop me a thumbs up if you found some value from this video. Let me know down in the comment section below what you guys think of NIO stock and how many shares you guys are either holding of NIO or Xpeng Motors. But anyways guys, I hope you enjoyed this video and I'll catch you guys in the next one. Take care.